If you are a Canadian dual citizen living outside of Canada, or if you are planning to travel abroad and return home this year, then the next few minutes of this video could be the most important thing you watch in 2026. Because right now, a new passport rule is quietly changing the way Canada handles entry for dual citizens. And if you are not aware of this rule, if you do not have the right travel document in your hand when you arrive at a Canadian airport, you could be stopped at the border. You could be delayed, questioned, or even turned back. This is not a rumor. This is not an exaggeration. This is something the Canadian government has made official. And too many seniors are still finding out about it the hard way. And on top of that, there are major updates to your CPP, your OAS, and your GIS benefits for 2026 that every Canadian senior needs to know about right now. So stay with me. Do not skip ahead. Because by the end of this video, you will have everything you need to protect yourself, protect your benefits, and move forward with confidence. Welcome back to Mr. Jack, the channel dedicated to keeping Canadian seniors informed, empowered, and ahead of every major government update that affects your money, your rights, and your daily life. I am so glad you are here today, because what we are talking about in this video touches the lives of hundreds of thousands of Canadians, especially those of you who hold citizenship in more than one country, and those of you who depend on government benefits like CPP, OAS, and GIS to live comfortably. Today we are going to break down the new 2026 passport entry requirement for dual citizens in plain, simple language. We are going to explain exactly what it means, who it affects, and what you need to do. Then we are going to walk through all of the latest changes to your Canada pension plan, your old age security, and your guaranteed income supplement for the year 2026, including payment increases, new eligibility rules, important dates, and real impacts on your day-to-day life. This is a long video because this is an important topic, so get comfortable, take notes if you can, and let us get started. Let us start with the passport issue because this is the one that is catching people off guard the most. For many years, Canadians who also held citizenship in another country could travel back to Canada using either their Canadian passport or their foreign passport. The rules were not always strictly enforced in a way that caused major problems at the border, at least not for most people, but that has changed. Canada now requires that all Canadian citizens, including dual citizens, enter and exit Canada using a valid Canadian passport. This rule is not brand new, but it is being enforced more strictly in 2026, and it applies specifically at airports. If you arrive at a Canadian airport on an international flight, you must show a valid Canadian passport to board that flight and to enter Canada. Your other country's passport is no longer sufficient on its own. Let me repeat that because it is critical. If you are a Canadian citizen, even if you also hold citizenship in another country, you must use your Canadian passport when flying into Canada. Airlines are required to check this before you board. If you show up at a foreign airport with only your non-Canadian passport to board a flight to Canada, the airline may not allow you to board. Now, why is this rule being enforced more strictly in 2026? There are a few reasons. First, Canada has updated its electronic travel authorization system, known as the ETA. Second, there have been changes to international aviation agreements that have pushed airlines to verify citizenship documentation more carefully. And third, Immigration, Refugees, and Citizenship Canada, the department responsible for this, has issued updated guidance to airlines and border agents about how to handle dual citizens. So what does this mean for you as a Canadian senior who may be a dual citizen? It means that before you travel anywhere outside of Canada, whether it is a vacation, a visit to family, or a longer stay abroad, you need to make sure your Canadian passport is valid. You need to check the expiry date. You need to make sure it has not expired or is not about to expire before your return date. If your Canadian passport has expired, you need to renew it before you travel. And given that passport renewal wait times in Canada have been significant in recent years, you should not wait until the last minute. Apply for renewal as early as possible. Give yourself several months of buffer time. If you do not have a Canadian passport at all, which some dual citizens never bothered to get because they were traveling on their other country's documents, then you need to apply for one now. This rule can affect retirees and seniors in a very specific way. Many Canadian seniors retire abroad. Some go to warmer countries in Central America, Southeast Asia, or Europe. Others go to live near family members who are settled in other countries, and some have held dual citizenship for decades without ever thinking about which passport they use to come and go. If you are one of those people, this is your alert. Check your Canadian passport today, know when it expires, and if you need to renew it, start that process before you make any travel plans. There is one more thing worth knowing here. If you are already outside of Canada and your Canadian passport has expired, you still have options. You can apply to renew your Canadian passport through a Canadian embassy or consulate in the country where you currently are. This process may take longer than applying inside Canada, so again, do not wait. The Government of Canada's official travel information is available at travel.gc.ca, and we encourage every viewer to check that website for the most current and detailed guidance specific to your situation. Now you might be wondering, what does a passport rule have to do with my CPP or my OAS? That is a fair question, and the answer is very important. When you leave Canada for an extended period, or when you establish residency in another country, it can have a direct impact on your ability to receive certain Canadian government benefits, particularly your old age security pension and your guaranteed income supplement. The Canada Pension Plan is generally a more portable benefit. Your CPP is based on contributions you made during your working years in Canada. As long as you are eligible and you have applied, you can receive your CPP payments whether you are living inside or outside of Canada. For most dual citizens living abroad, CPP continues to be paid without major issues. However, old age security is different. The OAS pension is funded through general government revenues, and eligibility is based on your years of Canadian residency, not your contributions to a payroll plan. To receive OAS, you must be 65 years of age or older and have lived in Canada for at least 10 years after the age of 18. To receive the full OAS amount, you generally need 40 years of Canadian residency after the age of 18. Now here is where it gets more complicated for dual citizens who live outside Canada. If you are a non-resident of Canada, you can still receive OAS, but the government will withhold a non-resident tax from your payments. The standard withholding rate is 25%, although this may be reduced under a tax treaty between Canada and the country where you live. Canada has tax treaties with many countries, so if you live abroad, you should find out whether a treaty applies to your situation. And the GIS, the Guaranteed Income Supplement, is even more restricted for people who do not live in Canada. The GIS is designed to support low-income seniors who are living in Canada. If you leave Canada for more than 6 months in a calendar year, your GIS payments will generally stop. They do not continue while you are abroad. This is one of the most critical pieces of information for any dual citizen senior who is considering spending long periods outside of Canada. So the passport rule and the benefits rules are connected in a very practical way. If you are a dual citizen who splits your time between Canada and another country, you need to understand both sets of rules, and you need to make sure you are managing your residency status carefully to protect the benefits you are entitled to receive. Now let us move into the detailed updates for your benefits, starting with the Canada Pension Plan. The CPP is Canada's contributory retirement program. Most Canadians who worked and paid into the plan during their careers are eligible to receive CPP retirement benefits. Payments can begin as early as age 60, though at a reduced amount, or as late as age 70 at an enhanced amount. For 2026, there are several key updates that CPP recipients need to know about. First, the maximum monthly CPP retirement benefit has increased again in 2026. The government adjusts CPP benefit amounts each year based on the Consumer Price Index, which measures inflation. Because inflation has remained a significant concern in recent years, the adjustment for 2026 reflects the ongoing effort to maintain the purchasing power of these benefits. The maximum monthly CPP retirement benefit for someone who starts receiving CPP at age 65 in 2026 has been adjusted upward. This is the direct result of the annual indexing mechanism built into the CPP program. If you are already receiving CPP, you will have seen a January 2026 increase in your monthly payment amount. This increase was applied automatically. You did not need to apply or do anything to receive it. Second, the CPP enhancement program continues to affect how benefits are calculated for people who contributed to the enhanced CPP after 2019. Canada began enhancing the CPP in 2019, gradually increasing both contribution rates and the benefit levels that contributors will eventually receive. If you contributed to the enhanced CPP, meaning you were working and paying into CPP after 2019, you will eventually receive a higher benefit than the previous generation. For seniors already retired and receiving CPP, the enhancement does not change your current benefit, but it is worth understanding for anyone who may still be working part-time and contributing. Third, CPP payment dates for 2026 are important to know and mark on your calendar. The Canada Pension Plan pays benefits on a monthly schedule. For 2026, the standard payment dates fall on the following days: January 29th, February 26th, March 27th, April 28th, May 28th, June 26th, July 29th, August 27th, September 25th, October 29th, November 26th, and December 22nd. These dates are set by the government and will not change unless there is an extraordinary circumstance. If your payment is scheduled to land on a weekend or holiday, it may arrive a day earlier, so do not be alarmed if that happens. Fourth, for those who have not yet started receiving CPP, the decision about when to start is more important than ever in 2026. Starting CPP at age 60 means your monthly benefit is reduced by 0.6% for each month before your 65th birthday, which works out to a total reduction of 36% if you start at exactly age 60. On the other hand, delaying your CPP past age 65 increases your benefit by 0.7% for each month of delay, up to a maximum increase of 42% if you wait until age 70. Given the benefit increases happening in 2026, delaying CPP even by a year or two can result in significantly higher lifetime income, especially if you are in good health and expect to live into your 80s or beyond. This is a decision worth discussing with a financial advisor or a Service Canada representative. The Old Age Security Pension is Canada's largest retirement income program. Unlike CPP, it does not require you to have made contributions during your working years. It is available to Canadians who meet the age and residency requirements. For 2026, there are important changes and updates to OAS that every senior should be aware of. First, the OAS pension amount has been adjusted for 2026. Like CPP, OAS is indexed quarterly to inflation using the Consumer Price Index. This means that 4 times per year, in January, April, July, and October, the government reviews the CPI and adjusts OAS payments accordingly if the cost of living has increased. For 2026, OAS recipients have already seen the January quarterly increase reflected in their first payments of the year. For seniors aged 75 and older, there is an additional benefit that was introduced in previous years and continues in 2026. Seniors who are 75 years of age or older receive a 10% permanent increase in their OAS pension on top of the standard payment. This increase was introduced to acknowledge the higher costs and specific financial needs of the oldest seniors in Canada. If you are 75 or older in 2026, this enhanced amount is automatically applied to your monthly OAS payment. Second, the OAS Clawback, more formally known as the OAS Recovery Tax, remains in effect in 2026. This is the rule that reduces your OAS payments if your annual income exceeds a certain threshold. For 2026, the OAS clawback threshold has been adjusted slightly upward to reflect changes in the income tax system. If your net income exceeds this threshold, you will be required to repay a portion of your OAS through your annual tax return. The repayment rate is 15 cents for every dollar of income above the threshold. If your income is high enough, your OAS could be reduced to zero. This is an important planning consideration for seniors who have significant income from pensions, investments, or part-time work. If you are approaching or above the OAS clawback threshold, speaking with a tax professional about strategies to manage your taxable income can be very worthwhile. Third, OAS payment dates for 2026 run on the same monthly schedule as CPP, and the dates are as follows: January 29th, February 26th, March 27th, April 28th, May 28th, June 26th, July 29th, August 27th, September 25th, October 29th, November 26th, and December 22nd. You can confirm your specific payment schedule by logging into your My Service Canada account online or by calling Service Canada directly. Fourth, for seniors who have not yet applied for OAS, a key reminder: OAS is not always applied for automatically. In some cases, Service Canada will notify you that you have been automatically enrolled. But in other cases, particularly if you have lived outside Canada for extended periods or have a more complex residency history, you will need to apply manually. Do not assume your OAS will just start arriving. If you are turning 65 in 2026, check your enrollment status now. The Guaranteed Income Supplement is a monthly non-taxable benefit paid to low-income seniors who are already receiving the Old Age Security Pension and who live in Canada. The GIS is one of the most important income supports available to the most financially vulnerable Canadian seniors. For 2026, there are several updates to the GIS that are critically important. First, GIS amounts have been increased for 2026 as part of the same quarterly indexation process that applies to OAS. If you are currently receiving GIS, your payments have been adjusted upward to reflect the cost of living increases that have been measured since the last adjustment. These increases happen automatically and do not require any action on your part. However, and this is very important, the GIS is not a permanent set-it-and-forget-it benefit. Unlike CPP, which is based on contributions and does not require annual renewal, the GIS is income tested every single year based on your previous year's tax return. This means that in order to continue receiving GIS, you must file your income tax return every year, on time. If you do not file your taxes, Service Canada cannot assess your income for GIS purposes, and your GIS payments can be stopped. This happens to thousands of seniors every year. They miss the tax deadline, their GIS is interrupted, and they face financial hardship while trying to get the payments reinstated. The most important deadline to know is April 30th of each year. This is the standard tax filing deadline in Canada. If you are a GIS recipient, missing this deadline can result in your GIS being suspended for the period from July of that year through June of the following year. That is up to 12 months of missed payments that could cause serious financial strain. For 2026, the April 30th deadline falls on a Wednesday. There are no extensions or grace periods for most people. If you need help filing your taxes and cannot afford a professional accountant, there are free tax clinics available across Canada through the Community Volunteer Income Tax Program, which is administered by the Canada Revenue Agency. Many libraries, community centers, and seniors organizations host these free clinics each spring. Second, the GIS also has a residency requirement that is strictly enforced. As mentioned earlier, if you leave Canada for more than 6 months in a calendar year, or more specifically, if you are absent from Canada for more than 6 consecutive months, your GIS payments will stop. They will resume when you return to Canada, but you may need to reapply or contact Service Canada to get them restarted. This is especially relevant for dual citizens and for seniors who spend winters in warmer climates. If you are planning an extended trip outside Canada to visit family, for health reasons, or for any other purpose, please calculate your travel time carefully. If your absence will exceed 6 months, you should contact Service Canada before you leave to understand exactly how it will affect your GIS, your OAS, and any other benefits you receive. Third, the maximum GIS amounts for 2026 depend on your marital status and your household income situation. Single seniors receive a higher maximum GIS than married or common law couples because the GIS calculation accounts for combined household income. In all cases, the GIS is reduced by 50 cents for every dollar of non-OAS income you receive, meaning the more additional income you have, the lower your GIS will be. This also means that seniors who have very little income outside of OAS receive the highest GIS amounts. For the most current GIS payment amounts in 2026, we recommend checking the official Government of Canada website at canada.ca or contacting Service Canada at 1-8002-779-914. The amounts are updated quarterly and can change slightly from one quarter to the next. Fourth, one thing that many seniors are not aware of is that the GIS can be applied for retroactively in certain circumstances. If you were eligible for GIS but did not apply in a prior year, you may be able to receive up to 11 months of back payments. This is worth exploring if you have recently learned about GIS for the first time or if you were previously disqualified, but your income situation has changed. Now let us bring all of this together and talk about the real, ground-level impact of all these updates on the lives of everyday Canadian seniors in 2026. The good news is that all of these risks can be managed. The key is information. And that is exactly why we make these videos at Mr. Jack, to give you the information you need to protect yourself and make good decisions. We are now at the critical alerts section of today's video. Please pay close attention to every single one of these points. Share this video with any family members or friends who might be affected. Alert number 1. If you are a Canadian dual citizen and you plan to travel outside Canada in 2026, you must use a valid Canadian passport to re-enter Canada by air. Do not board an international flight to Canada without your Canadian passport. Check your passport expiry date today. Renew it immediately if it is expired or about to expire. Alert number 2. GIS recipients must file their income tax return by April 30th, 2026. Missing this deadline can result in your GIS being suspended for up to 12 months. If you cannot afford a tax preparer, contact your local library, community center, or seniors organization to find a free tax clinic near you. Alert number 3. If you are a GIS recipient and you plan to be outside Canada for more than 6 months in 2026, contact Service Canada before you travel. Extended absences can trigger the suspension of your GIS and in some cases your OAS. Know the rules before you go. Alert number 4. The OAS clawback threshold for 2026 has been adjusted, but if your income is rising due to investment gains, pension income, or other sources, you could be approaching the threshold. Review your estimated annual income for 2026 and speak with a financial or tax advisor if you are concerned about the clawback. Alert number 5. If you are turning 65 in 2026 and you have not yet applied for OAS, do not wait. Apply at least 6 months before your 65th birthday to ensure there are no delays in your first payment. You can apply online through My Service Canada account or by calling 1-800-277-9914. Alert number 6. If you have been receiving CPP and OAS, but you have not yet applied for GIS, you may be missing out on hundreds of dollars per month. The GIS is specifically for lower-income seniors and is non-taxable. Many seniors who qualify do not apply simply because they do not know it exists. Check your eligibility today. Alert number 7. If you are a Canadian citizen living abroad and you receive OAS, be aware that the non-resident withholding tax applies to your payments. Check whether Canada has a tax treaty with your country of residence that could reduce your withholding rate. You may need to submit a tax treaty relief application to the Canada Revenue Agency. We have covered a lot of ground in today's video, and I want to take a moment to summarize the most important points before we close. In 2026, Canadian dual citizens must use a valid Canadian passport when entering Canada by air. This rule is being strictly enforced. If your Canadian passport is expired or you do not have one, take action now, before you travel. The CPP, OAS, and GIS have all seen benefit increases in 2026, reflecting quarterly cost of living adjustments tied to the Consumer Price Index. These increases are applied automatically for current recipients, but there are rules and requirements that must be followed to keep receiving your benefits without interruption. For dual citizens, the connection between your residency status, your travel plans, and your benefit eligibility is real and significant. Spending more than 6 months outside Canada in a calendar year can affect your GIS. Non-resident status affects how your OAS is taxed, and without a valid Canadian passport, you may not even be able to get back into the country to access your services. For seniors approaching 65, now is the time to apply for OAS and to assess your eligibility for GIS. Do not leave money on the table that you are fully entitled to receive. And for everyone, whether you are a dual citizen or not, whether you live in Canada or abroad, staying informed is the single most powerful thing you can do to protect your financial security in retirement. That is why Mr. Jack exists. We are here every week with the latest updates, plain language explanations, and practical advice for Canadian seniors. We do not use complicated government language. We do not assume you already know everything. We break it down clearly, calmly, and completely, because you deserve to understand what is happening with your money and your rights. If you found this video helpful, please give it a thumbs up. It takes just a second, and it helps more Canadian seniors find this information when they need it most. If you are not already subscribed to Mr. Jack, please click the subscribe button right now and make sure you hit the notification bell so that you never miss an update. We post new videos regularly covering everything from CPP and OAS changes, to GIS rules, to housing benefits, healthcare updates, tax tips for seniors, and much more. If you have a question, leave it in the comments below. We read every comment, and we do our best to address your most common questions in future videos. And if you know a senior, a neighbor, a family member, a friend who could benefit from this information, please share this video with them. You might be making a bigger difference in their life than you realize. Thank you so much for watching. I am Mr. Jack, and I will see you in the next video. Stay informed, stay safe, and take care of yourself.